Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Sunday, December 15th, 2013. Last week, the S&P 500 sold down from its multi-year high at 1812 and auctioned back down through the previous trading range. During the previous week, S&P futures had held support at or near the 1772 price level and auctioned back to retest the multi-year high at 1812. The market had established a minor support level at 1800, which was breached on Wednesday when the S&P sold down through the trading range. The sell-off corresponded with the rollover in the December-March futures contract. While the S&P had been holding support at or near 1772, the December contract made a lower low, trading down to 1776. During Wednesday's sell-off, there was very little in the way of a retracement. The S&P paused briefly and auctioned back up to 1792, and again stalled at or near 1782 prior to the sell-off into the close. On Thursday, the S&P auctioned back up at or near 1778, but sold off again Friday to retest Thursday's low. We noted in Thursday's commentary that the market breadth, the advancing-declining ratio in the S&P 500, indicated that the selling pressure may not have been resolved. There was no indication of climax selling during Friday's retest of the low. The advanced decline line was neutral at Friday's close. However, the S&P was unable to retest Thursday's high and close the session at or near the low. As we approach the end of the year, market participants are focused on the next FOMC session. There is increased speculation that at this week's FOMC meeting, the Federal Reserve will announce that it is going to begin its quantitative easing before the end of the year. Therefore, while the market has held support thus far, there is a serious risk that the market will breach support and auction down to the next major support level located at 1754. As we look over Thursday and Friday session, we see that each time the S&P traded up at or near the 1777, 1776 price area, the market encountered a lack of buying interest. Similarly, there was a lack of selling pressure at the initial stopping point. However, the final reaction on Friday's session was weak. Coming into Monday's session, should the S&P pull back and the order flow events indicate that there is high-frequency initiated selling, we would expect to see the market break down below minor support and pull back to 1754. In that event, the retracement back at or near Friday's low would then be deemed resistance, and we would expect to see the market stall and pause on a retracement back to the 1766, 1767 level and auction down and retest support before attempting to move higher. At this stage in the market development, traders have to be on the alert for short covering. If support continues to hold during Monday's session at 1765, 1766, we would then expect to see the S&P auction back to 1778 and the possibility of a breakout above 1778 and a retracement up to 1792 would be the likely price path. In the event that at this week's FOMC meeting, the nominated chairperson, Janet Yellen, is true to her earlier comments and confirms that there will be no tapering before March 2014, we would likely see the S&P auction back to the multi-year high at 1812. That concludes our recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.